Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm Tracy Reineck, your host, and this week I'm joined by Zacks stock strategist and the editor of Zacks Momentum Trader, David Bartosiak. Welcome, Dave.
Good to be here.
We're going to talk about one of your favorite topics. It's about one of the basic investment strategies, and it is momentum, because you are, after all, the momentum guy.
The momentum guy.
So you know all about that. I'm a value investor, so trading according to the chart is very strange to me. I have been learning from you and many others, but it still goes against my instincts. But I know it's your instincts and a lot of other people's instincts. They love it. They love to trade on that upward momentum. So let's start with just the basic. What is momentum trading?
So, there's no momentum like momentum, Tracy.
Oh, that's nice. That's where this is going to go today?
That's where it's going to go. No, momentum stocks are the hot stocks that everybody wants to talk about. They're the ones that they're screaming about on CNBC. They're the ones that your buddy is in now and got a hot tip, and they're the sexy stocks that everyone wants to talk about. So when you look at what makes a momentum stock, typically it has a decent story behind it, right? Here at Zacks, I do it a little differently, though, and we'll get into that, kind of how we look at momentum stocks. But it has a story. There's interest that's increasing on it, so you're going to see more people trying to buy into it, more volume, and typically the prices are on the move. So that's when you see those wild swings. Typically, those are in your momentum stocks. So last year, the FANG stocks, right, were a big deal. Those were momentum stocks. That's the Facebook, Amazon, Netflix, and Googles of the world.
Now, momentum and the chart, does that mean it has to be at a 52-week high?
No, it doesn't. But that's what I look for.
Okay.
Because typically that momentum, if you think about physics, right, a body in motion tends to stay in motion. It's the same thing with a stock. A stock on the move and hitting new highs tends to hit new highs. So that's a very easy way to uncover a momentum stock, is by scanning that list of new 52-week highs that are being made.
So what else would there be? What else is entailed in it then, if it's 52-week highs and that's it?
Well, that's part of it. So you also like to look for, so I guess I would call that price momentum, right?
Okay.
You're approaching these 52-week highs, bursting through the new highs. That's more purely a play on the price, right? The other thing is momentum in volume. So if you're starting to see a pickup in volume, that tells you that more people are looking at the stock. Maybe now there's institutional interest where there wasn't before. So that's another type of momentum that I look for. Then there's also earnings momentum. So a company that has recently beat earnings several times in a row. I know you love to put those charts on Twitter, and stock twits of the price, the EPS surprise charts that we have. And then the other thing, which is a little bit more hidden, but here at Zacks we look at it, and it's the estimate revision momentum, right? So you've got analysts very recently pushing up those earnings estimates, and that can be a really key indicator of what may be to come around the corner.
I did have a question about the earnings momentum and what it's like to trade momentum stocks during earnings season. So we're in the middle of earnings season right now as we record this, and I have noticed some of the stocks that I follow that would be at least considered momentum stocks, because they're trading near their 52-week highs. They've had big boosts off those winter lows that we had. And then you get the earnings report, and even if they beat, sometimes the stock goes down, and it seems like it's hard to trade momentum into the earnings report. Is that a good thing? Should I try it?
It is more difficult. The easiest way to trade a momentum stock is to have an event that takes place, and then you want to ride the momentum coming off of that event.
So would it be better to be in after they report?
Yeah.
Okay.
Yeah, it's better after because the dust settles a little bit and you don't have that event risk. I mean, that's the major issue. And that's why in Momentum Trader, we usually get out ahead of earnings, because we don't want to have that unknown that's out there that could derail this thing. So that's what I think that's why we kind of get out of the way. And plus, during earnings season, you've got all these companies that are reporting. And what tends to happen is traders will take a look at, one stock that reports in that sector and then think that that's how the rest of the sector is going to go. So there's a lot of situations where one company ends up selling off because, a competitor had a bad report. And then that doesn't necessarily reflect on, their fundamentals or what's happening in their company, but it's just a baby with the bathwater scenario.
Now, since I am a value investor, I was looking around at our momentum screens on Zacks.com, and there was one that used the price to sales ratio, and it searched for low price to sales. So it seems like that screen has like a value component. Is that good? Is that like taking momentum one step further to add that value component, or does it just kind of muddy the waters by trying to throw some kind of evaluation in there?
Yeah, I think somebody was trying to get cute and optimize that a little bit.
Okay. So you don't use that one?
No, not at all.
Okay. You're basically saying, no, that seems crazy.
I mean, you shouldn't. I mean, if you truly are a momentum investor, momentum trader,
then you don't care.
Then why are you adding these other things?
Right.
You shouldn't care at all. If you came out and said, I'm only looking for momentum, then why are you, muddying it up for yourself?
So tell me, what is it like? What does it take to actually buy on these highs? Because I look at the chart and I think it's crazy. I'm like, it's already run up, 10, 20, sometimes even more, 30%. Sure. And I get asked this question all the time. Oh, Tracy, that stock's already up big. How can it keep going? And it does make me a little scared, even though I know you just said the momentum begets momentum and it kind of gets this, drag higher here. But as someone who's looking to, jump in there, how do I flick the switch and force myself to get in there even at these highs?
So this is the thing. Let's say a stock has approached a 52-week high, right? And it's right near it. And this is why I try to look for stocks that are right near it and have recently broken through the 52-week high, right? I try to look for charts that have a prior 52-week high that was an area of resistance in the past, right? So that now when the stock has broken above that previous 52-week high, what used to be resistance for the stock will become support for the stock. So that way you can adjust your risk parameters and say that, okay, well, I'm just going to put a stop loss just a little bit below where that previous 52-week high was. That way, hopefully, that level will be defended if the momentum starts to die out and this thing pulls back a little bit. So I think that's different than the stock that just, shoots higher and is just kind of a runaway train. Those are not really the kind of stocks I'm looking for. So that's why it's like when you say, yes, I'm looking for a 52-week high, that doesn't mean that you just blindly look right. at, run the screen, look at the chart and say, or without looking at the chart and just say, okay, all 5 of these run, go.
Yeah.
Because it's different. You want to see it approaching a previous 52-week high and being above it.
Okay.
Which makes it a little easier because then, like I said, you could set your risk parameters and you're not just chasing for the sake of chasing.
Okay. Now, you said you add in like some secret Zaxiness to your search parameters. Can you tell us what those are, or what else do you look for other than, what you were just talking about with the highs?
Yeah. So without giving away all of the secret sauce, right? There is a relative strength component that I put inside of there because I want to make sure that the momentum behind the stock is not just market momentum, that there's actually something stock specific that's making it stand out. So I want to make sure that it is outperforming the market on a relative basis over, in the short term, really, like over the last month or so. What has it been doing? So that's a big part of it.
Okay.
And then, there's the chart, which I can't sit here and just program like an algorithm to give me a yes or no on which charts I'm going to like or not like, because there's a few things you got to look at. One of them is those levels of support or resistance that you'd be looking for. Again, that's why I use that previous 52-week high. So that's always good. The other thing is I want to see what sort of trend line it's been bouncing off, whether that's one that you draw in by yourself, or if you use a moving average to establish that trend for yourself. And then I like to use a short-term trigger, like with the commodity channel index, gives me a decent overbought, oversold indication on the stock. So whether it's run up like crazy relative to how it's been moving, or if the move is just kind of more in line with a slow, steady accumulation. Because that's really what I'm looking for, is kind of a steady accumulation that bursts through resistance at the previous 52-week high, versus something that's, spiking higher like crazy, like some of these biotech names, right? You get an FDA approval or something, and then all of a sudden it's up 30% in one day. That's not really the story I'm looking for, because as quickly as that goes up, it ends up selling off, as people's expectations are kind of tempered. And
so that plays to the volatility of the stock. You do look at volatility.
Sure.
Then.
Yeah.
Okay.
Yeah. And it's funny. It's like the best stocks end up being the most boring stocks, right? Because the momentum's there and there's a steady accumulation that's happening. There's an uptick in volume and people are starting to look at it, and it's got a lot of momentum, but it's not like bouncing all over the place, because that's just how to get whipsawed out of a trade,
Yeah.
So you got to kind of try to avoid some of that.
Do you have a stock size that you try to keep it at? Does it matter if it's a small, a mid? Do you stay away from the micro caps or?
Well, actually, I usually stay away. I'm kind of in the middle, so I try to stay away from the micro caps, and I try to stay away from the mega caps, just because it's I don't know, it just fits my style better. I suppose you do want to have some upside potential, and I think you're not going to get, we're not going to go up as much trading even Google as we are a smaller name that's got a lot more upside potential, especially if that volume momentum is there, right? Because that's the other thing, is how much volume increases are going to be on Google, right? You're just not going to have it. So that kind of helps to weed out a lot of that. Is, well, if there's a huge uptick in volume here, then we know, something's going on. It's starting to get on the radar, and that's kind of the fun part.
What about, say, stocks under $10 or something like that? Are those too volatile?
Not necessarily. I mean, I've had stocks under 10 in the portfolio before, and they do tend to whip around. It's all about your own personal kind of risk parameter that you're going to set up in there. If you know it's going to be a more volatile stock, maybe you give it a little more room. So rather than having like an 8% hard stop loss on something that you normally take a full position in, if you know it's going to whip around more and you want to give it a little bit more space, then you can go ahead and drop that to a 15% stop loss, but then just change your position size. Don't make it a full position. You make it a half position. Then you've got the same amount of money at risk, but you still have, upside potential too.
Now, what about the Zacks rank? How does that fit into momentum?
So it makes it a lot easier for me to uncover momentum stocks, because again, part of what I'm looking for is that earnings estimate momentum.
And a good Zacks rank of like a 1 or a 2 would mean the earnings estimates are rising.
Exactly. So that helps to take care of that part of the equation. So I always do that every screen. Zacks rank number 1 or Zacks rank number 2. I've never bought a 3 or less. And anytime I see them dip to a 4, obviously I'm trying to get out.
Yeah.
Because I don't think I've ever had a scenario where a stock was a 1 or a 2, then it drops to a 4 and it's still going higher. That doesn't happen that often.
Okay. That's a good tip.
I don't think I've ever seen it.
Yeah.
Yeah. Because if those earnings estimate revisions are coming down,
the stock usually is going to come down.
Yeah, something's up.
Something's happening. Yeah.
So I haven't had too many of those, thank goodness.
Well, that was another question I had. When does momentum end? When do you know? You just gave one scenario where it goes to the 4, and that usually indicates that its momentum is ending at some point.
So there's a dead giveaway. The other thing too is, depending on what trend line indicator you're using. So if you're using a moving average, when there's a dip below that moving average on volume, then you're in trouble. Even using the commodity channel index, if it cuts down below the 0 line, which is kind of the line in the sand for that indicator, then you know that momentum is starting to run out here a little bit. And then the other thing too is you can just kind of eyeball it, and if it's bouncing off of a certain level and it just can't find a way over it, and you know that there's no event coming up that could get it over it. I mean, you just kind of go, well, like kind of it's done here. The move's done. And there's nothing wrong with taking money off the table,
Right.
because there's always another. Trades are like buses, right? There's another one coming.
Yeah.
So.
Well, let's talk about a couple trades you found using your screens and that you consider to be momentum, because I think giving some examples is also helpful to people like me.
Sure.
It was helpful to me to even just look up some of these that you gave. So should we start with Hasbro? You found that one. That's the ticker HAS.
Yeah, so on this screen, this is one I run pretty much every week. And this isn't all the secret sauce of momentum trader. So this one's a little easier to run. So what I do is, and I usually write my investment ideas on this. And it's cool because, I get new ideas all the time. So I look at the Zach's ranked number 1 and number 2s. Then I also use the momentum style score of B or better. So the A's or B's. And with the style score, you get the volume momentum, the earnings momentum, the estimate momentum. It's all kind of baked into that style score. So again, it makes my life a lot easier.
Yeah.
And then I look for stocks that have at least, I think it's 100,000 in volume. Okay, so depending on the share price, that could be a lot or a little, right? But you at least want to make sure that it's trading a little bit. And depending on the market. In this case, when I ran it, I just said at the 52-week high. But when the market kind of softens up a little bit, that's the parameter that you can stretch out.
Okay.
Okay. Don't stretch out the other ones.
How big do you want to stretch it to? Because I've seen, within 10% of the 52-week high. Is that too wide?
No, I don't think that's too wide at all.
Okay.
Again, because that's probably the move you're looking for. At that point, it's like, okay, well, then this is the best of the market. Maybe this one will get to the 52-week high and get slapped down.
Yeah.
So, yeah, I mean, I've done it 90. I think once when the market was really bad in February, I had to go to 85.
Wow.
And really what it's a function of is just how many stocks pop up on the screen.
Right.
So if
Were you getting anything in February with the market
at
crashing
100,
down?
no. At 95, no. At 90,
Yeah.
I think I got 2.
Okay.
So I had to go all the way to 85, and I found like 6.
Now, does Momentum Screen, can that tell you that you might have an overbought market because you're suddenly getting like 50 stocks coming through your screen or something? Okay.
Yeah, and I like to use it. I like running this because looking at what pops up over time while you're running these is great, because then it tells me if I look and there's 3 stocks in the same sector that are popping up over time, then I know that sector is starting to heat up.
Yeah. You can see some trends for sure.
Totally. And then so even this on this list, so like we're talking about, you got Hasbro, right?
Right.
I wouldn't think, they're not screaming about Hasbro on CNBC, right?
No. It's up 11% in the last month.
Right. But so why is this happening all of a sudden?
I don't know.
Right. Well,
something good.
And the thing is,
we
don't even need to know. What do we know? We can just say, well, it's within it's at the 52-week high right now.
Yeah.
There's been an uptick in volume. The earnings estimates are moving in a positive direction. So what else do I need to know? I don't care what toy is hot right now.
Right.
Right? Doesn't matter. That's why everybody makes fun of me. Like, oh, you're a momentum guy. You don't know anything about the actual companies. No, and I don't care. Right?
See, that's why I get all disturbed, because I like to care, but
Sure.
I'm trying not to care more with the momentum and looking at these other styles of investing.
Right. Right. And
So you need to black all that out. Just
Yeah.
look at these other factors.
See, this works for me because I never get into a scenario where I'm in love with a stock and I'm in love with a story, and I write it all the way down. Like, I don't have that personal connection to these stocks because I don't care.
That can really cause real problems with investors, I think.
Sure.
Of falling in love.
So then that's kind of the problem that can arise if you're a value investor and you're wrong.
Right.
Because sometimes those stocks don't come back.
That's right.
Right? They're going to get cheap, and it's never going to happen.
Sitting in there for a while.
Of course.
The value traps.
Of course, we've got tools here. We got the Zach's rank, which hopefully is going to help you avoid those situations, right?
So let's look at another one. You had Bank of California on here, a small little regional bank. They only have 100 locations in California. They're up 19% over the last month.
And that's a stock that we've had in Momentum Trader in the past.
Okay.
And it was one of several of the regional banks that popped up on the screen there.
Okay. So that was telling you the regional banks were heating up.
Yeah, and this was a while ago. I mean, this was a few months ago. I was surprised to see that on this list again, to be honest with you.
Okay.
So I think
so once a momentum, and then if it kind of peters out, it might not regain the momentum, is what you're saying.
Totally.
Okay.
Yeah, it could be a flash in the pan thing, but when you start to see these stocks pop up again and again and again, then you know something's brewing, right?
Yeah.
So Bank of California all of a sudden is on this list again. It's like, oh, what's going on over here?
Okay, that's an area to watch. That ticker is BANC.
Mm-hmm.
And another one you found is Boston Scientific.
Right.
That's a little bit bigger cap. That's a ticker BSX, but they're up 9% in the last month.
Yeah. Again, it kind of makes you wonder.
They haven't reported yet, though. So here's the scenario where you might be rolling the dice a little bit.
Yeah, you got a little bit of risk heading into the report, but you do have that, again, positive earnings momentum, right?
Yeah.
Or earnings revision momentum, because these guys had to come out on a limb and go ahead and do that. That's almost where it's like I defer to Eric, and surprise trader, right? Of like, okay, well, I get it in between, but like, should this, something you stick around with? And you just never know.
Another one on your list, also kind of in this medical, they're both kind of medical device companies, is Becton Dickinson. Now, I'm kind of surprised. I have to admit, I've never heard of this company. And I had to look it up. I'm like, are they foreign? Are they like in the UK or Canada or something? And they're in New Jersey. They employ 50,000 people and they have a market cap of $33 billion.
Isn't
and
it
I was
amazing?
like, why don't I know them?
Right.
They make syringes and needles and things like that.
Yeah.
And the shares are up 7.6% in the last month.
It's like one of those places you never hear of it until
that?
you heard of it, and now you're going to see it, right? So the next time you're in a hospital, you're going to be like, oh, okay, that makes sense.
I know who makes that.
Yeah.
Their ticker is BDX, by the way.
But again, but then look at what we got. We've got BDX and we've got BSX on this screen now all of a sudden. So it's like, oh, wait a minute. Maybe we should be looking into the medical devices here overall.
Yeah.
Right? And then again, is this a function of, earnings over the last couple of weeks? Have we already seen a company like this report and it's been good, and then all of a sudden it's a shot in the arm to the rest of these guys? So it's good because it kind of helps you. It helps me figure out where I need to look. Like, where could the next story kind of possibly be based on what's already happened versus me thinking that I'm smarter than everybody.
Right.
I don't have to do that. I just look at what's already happening.
Yeah, you see these.
Don't have to come
trends.
up with any. Yeah, you don't have to come up with any narrative on your own. You just have to read what's happening.
Yeah. Okay. The fifth company you screened for was Tile Shop, and that ticker is TTS. They're up big. They're up 25% in the last month.
Yeah, this one's a smaller company.
Yeah, they're small cap.
And that's the thing too, is sometimes you run these and you get these obscure names that you've never heard of, but that's great.
Yeah.
Well,
yeah, someone's heard of them if they're up 25%.
Right. And then so this is another, and
They sell tile
for your house, right?
Yeah, but this kind of goes into the play of how hot Home Depot and Lowe's
exactly,
and anything with home construction and interior decor and all that.
So that's why you look at this and you see this, and it's hard. I mean, just look at where we're at. So medical devices, right? Then you've got construction-ish.
Yeah.
You've got a regional bank, and you've got a toy company.
Yeah.
And you're going to tell me that we're on the verge of recession?
Not if I looked at that. No.
Exactly. So again, I don't have to think about the market. All I have to do is look and see what's happening. And if we were on the verge of recession, you wouldn't have the Tile Shop breaking through to new 52-week highs.
What would we have? It would utilities? Do you ever get utilities or like REITs in momentum? Is that even possible?
Yeah.
You do?
Sure.
Okay.
Because, especially like some of these storage REITs.
Yeah.
They're up there all the time because they're kind of like a different animal.
Yeah.
Right?
Yeah.
So you do get that. But you'll get, the thing is, it's hard to get anything. What will happen is I'll have to move from not 52-week high. You start to scale back.
Right.
And then you start to see consumer staples, and you do see utilities. Not necessarily REITs though.
Okay.
but you see more defensive areas of the market all of a sudden end up being in there, and then that
it could be bad.
It may not be so good. But when
all
you
right, so I need to
see,
ask you like every other day or once a week what your screens are showing.
Totally.
Or I'll just run them. There are some on Zacks.com. I could run those
just
myself.
run them and look and just go, okay, well, that's
see
where
what
we're at.
Sectors.
Because I think when I'm going to get nervous is when this is all tech.
Why would that make you
nervous? When this is all tech and the market is screaming higher.
Okay, so then it means it's overbought.
Then we can start having the overbought conversation.
Okay.
And we'll get nervous.
But not if you see, some medical devices in a regional bank. That doesn't seem all that glamorous.
No.
Okay.
No, and the regional bank is telling you what? That we do think their rates will come tick
up
higher here.
Yeah.
Get a little bit net interest margin on there. And hopefully those guys will be okay. And the other thing it tells you is we're not worried about real estate.
No.
Right? Not worried about a real estate bubble even in California.
No.
If Bank of California
for goodness
is on
sakes.
there, right?
Yeah.
So
okay.
Maybe the analysts who follow these stocks every single day, maybe they know a little something more than we do that are looking at all the stocks in the universe every day.
Yeah.
Right? So just kind of lean on them, and this helps you kind of read what they're saying.
Yeah. Okay. Well, this has been good. Makes me feel a little more comfortable of like trying to trade the chart, which, as I've said, is hard for someone who's a fundamental investor, I think, to trade it.
Well, I think it's because everybody just thinks that all we're doing is looking at the chart.
Right.
But here you kind of have the comfort of the Zacks rank behind it, and then now it puts into perspective, like, okay, what this chart is telling me, and now this makes more sense. So should make you more comfortable with trading from the chart.
It does. It does for sure. If you want to read more about other momentum stocks that Dave finds, you can check out his articles because he does put them out there for his investment idea pieces on Zacks.com. You can follow him follow the author on Zacks.com and get all of his articles on even more than momentum. He also puts out some great videos, so you can check those out on Zacks.com. What's the ones stocks making? No,
they're the trending stocks.
Trending stocks.
So they are
That's
off
kind of momentum,
the wall,
but and other things.
Yeah, they're off the wall a little bit.
Okay.
It's stories that people are talking about, things that are new. Really, a lot of what I do is I try to find the funny part of Wall Street. So things that are just ridiculous that
Wall Street can be. Well, I guess it can.
Sure. I mean, of course, it's just like what is going on here, right? I try to keep it topical, things that are happening. So like today, we're gonna do a video. I think I'm gonna do it on PayPal.
Okay.
And them having, a discussion on gender equality and having a panel of all males.
Okay.
I mean, that is great.
That is great. All right. I look forward to that. You can check that out on either YouTube or on Zacks.com. And you can also find all of our other podcasts where I've discussed some other interesting topics with Dave, including his love of sneakers, shoes in general. We're going to have to do another update on the shoes eventually.
The shoes and cars.
Some stuff is happening with that, yeah. And cars, we did a Peak Auto podcast. You can check that out.
Yeah, that's all there is to me. Shoes, cars.
Shoes and cars.
Shoes, car stocks.
Momentum. That's it.
Cubs.
Hey, it's okay to have, White Sox. White Sox. We're having, we're going to have Dave on again to discuss more of these topics, but you can check them out on SoundCloud.com. We're also, did I mention we're on iTunes, and you can also get the podcast now if you have Amazon Echo on their TuneIn. You can summon it as you're standing in your kitchen now and listen to us there. All of my articles are also on Zacks.com. And until next week, I'll see you then.